In this video, I'm going to be showing you a very simple 5-minute crypto scalping strategy to help you make profit from crypto trading as a beginner. So if you're a beginner or you're new to crypto trading, this is a very simple strategy that you can use to make profit. So ensure you watch this video to the end so that you don't miss any important step in this video. Now, in case you don't know what scalping is, scalping in crypto trading is a type of trading strategy where you make profit from short-term movements in the market. Now, it involves you entering and exiting a trade within minutes or even seconds, and it is mainly for day traders. Now, in simple terms, what scalping means is that, let's say for example, you enter the market with like $1,000 and then you do your analysis with a very short time frame. For example, let's say 3-minute time frame or 5-minute time frame, and then your target is to make like, let's say 1% profit or just 2% profit within maybe 1 minute or 2 minutes or even 3 minutes. That's the meaning of scalping. And then you do that for like 10 times in a day. So let's, for example, you are targeting like making 1% for every trade you take, and you are doing it 10 times. That means you are taking 10 trades, you are targeting 1% profit for each trade. Now, let's, for example, you now win 7 out of those 10 trades in a day. So 7% of $1,000 is $70. That means that you made $70 for that day. And then the next day you go into the market again and then you try to take different trades, and then again your target is to make like 1% profit in like very short period of time. So that's the meaning of scalping. And a lot of people always prefer this strategy of trading because it is easier for you to make 1% profit 10 times, that's 10%, than for you to just make 10% from one single trade. It is easier for some people. So there are a lot of people who prefer scalping. So in this video, I'll be showing you my simple crypto scalping strategy that you can also copy to make consistent profit for yourself. Now, one thing you need to know about crypto scalping is that for you to make any reasonable amount of profit, you need to have a reasonable amount of capital. So let's, for example, you are targeting like 1% profit per trade, and then you are having like, let's say $100. That means you're only making $1. And to me, that's very small. But if you're having like $1,000 and you're targeting like 1% profit or 2% profit, that's like $10 or $20 per trade. And if you are taking like 10 trades and let's say you win like 7 or 6, that's like $60 or $70 profit per day. So make sure that you have a reasonable amount of capital so you can be able to make reasonable amount of profit from this. Now, for this video, I'm going to be using the Bybit derivatives trading, and if you don't know how to do derivatives trading or futures trading on Bybit, I have a video on that already. I'll put the link to that video in the description below. That video will teach you the step-by-step guide on how to do futures trading or derivatives trading on Bybit. Again, the link will be in the description below. Now, to do my analysis and show you this strategy, I'm going to be using the trading view chart, but we'll come back to the Bybit page to take the trade. So I'll be taking real trades in this video so I can show you examples of how to use this strategy. But first, before we take any trade, I'll show you how to use this strategy on TradingView. So to do that, you open a new tab and go to tradingview.com. Now, in case you are new to TradingView, make sure you pay attention in this video so you can get everything I'm doing. Now, the first thing you need to do is to come right here to where you have this search bar. You tap on it and enter the trading pair you want to trade. So let's, for example, I want to trade BTC USDT. Let's say that's the market I want to trade. Once you search for it, the next thing is to come here to where you have all types and pick it, and then you search whether you want to do spot trading or swap or futures, whichever one. So for this video, I'll be using futures. So you pick futures right here. And then the next thing is to pick whichever platform you're using to trade. So remember, I want to use Bybit to trade for this video. So you come here to where you can see where you have futures Bybit right here, where the arrow is pointing to. Then you come right here and pick it. So right here, as you can see on the screen, we have the chart for BTC USDT futures contract on Bybit. Now, the next thing you need to do is to add the indicators to the chart. Now, the two indicators I'll be using for this video are the MACD indicator. MACD means moving average convergence divergence, and the second one is the EMA indicator. That's the exponential moving average indicator. Now, if you've been watching my crypto trading videos for a very long time, you should know that the MACD and EMA indicators are my favorite indicators to use. I use them a lot in most of my videos. So those are the indicators I'll be using in this video. Now, to add these indicators to your chart, what you need to do is to come right here to where you have indicators right here, and then you tap on it and then search for the indicator you want to add. So first, I'll be adding the MACD indicator. So you come right here and search for MACD. So once you search for MACD, you see it right here, moving average convergence divergence. So you tap on it, and once you tap on it, you see that it is already on your chart. So this is the MACD indicator right here. You can see where my cursor is. This is where you have the MACD indicator. Now the next indicator is the EMA indicator. So you come right here and then you search for EMA, and then you can see it right here, moving average exponential. So it can be moving average exponential or exponential moving average, whichever one. So you tap on it right here, and then if you go back to the chart, you see it. This is the EMA on the chart. So you can see this blue line on the chart. This is the EMA. Now for this EMA, we need 2 lines. Now for you to add another line, you come right here to this first one. So this is the first line right here where you have EMA 9 close 0. So you come right here and click on this 3 dots right here where you have more. And then once you tap on it, you tap on copy. You click on copy right here. And then you come under it and then you right click and click on paste. Now once you click on paste, you see that you have 2 different lines right here. But you don't have 2 lines, you still have 1 line right here. But so we need to edit these 2 lines right here. So the first one, you come to settings, this settings icon, you come to settings. Once you click on it, you come here to where you have inputs, and then you change this length, this is not 9 to 50. You put it as 50, and then you come under where you have style, and then you come to where you have this blue line right here and click on it, and then you pick the color you want for this. So for this, let me leave it out as blue color. And then you come down right here and make the line thick so that you can be able to see the line very well. So I'll pick this one as the line just so that we can see the lines very well. So right here, you see that one of the lines is bold. You can see it very well. Then you come to the second one also, the second EMA right here, and click on settings. And then you come right here to where you have input and change this 9 to 100. Remember the first one, we changed it to 50. Now under style, you come right here and change the color of the line. You know, the first one was blue, so let's change this one to, let's give it yellow. So let's pick yellow, and then you increase the thickness of the line. So let's pick this one again, and then you go back to the chart. So you can see we have 2 EMAs right here. The first EMA is for the 50 EMA, which is blue, and then the yellow line is for the 100 EMA. And below right here, we have the MACD indicator. Now, once you've done that, the next thing is to select your time frame. Now, to select your time frame, you come here to where you have 1 hour right here, and you pick 5 minutes time frame. Now this time frame, if you are using this time frame, don't use anything more than 5 minutes. That's my advice. You can use time frames less than 5 minutes. You can use 3 minutes, you can use 1 minute, but I always prefer to use 5 minutes or 3 minutes. So for this video, I'll be using the 5 minute time frame. Now the next thing is, what are these indicators used for? Now the EMA indicator is used to show you the trend of the market. So the EMA indicator is used to show you whether the market is in an uptrend or a downtrend. Uptrend means that it is going up, while downtrend means that it is coming down. That's the meaning. While the MACD indicator right here is used to tell you at what point the market is going up or down in the trend, and at what point do you need to enter the trade. Don't worry, you'll get to know more better in this video. Now the first thing you always need to check out for on the EMA indicator is something called crossover signals. So there's something called crossover signals. Now what does that mean? A crossover signal is when you have the 2 EMA lines crossing over each other. Now let me show you what I mean. So if you go back right here, you can see that at this point right here, the 2 EMA lines are crossing over each other. You can see that from this point right here, the blue line is above the yellow line, till this point right here where you have the blue line coming below the yellow line. So this at this point is where you have a crossover signal. So if you go back again, let's look for another crossover signal. You see that at this point you have another crossover signal. You see that from this point the yellow line was moving above the blue line, and then when it got to this point, the blue line moved above the yellow line. So at this point is where you can see you have a crossover signal. So that's the first thing you need to take note of. Now the second thing you need to take note of is that how do you know when you are in an upward trend or a downward trend? Now to know whether you are in an upward trend or downward trend, now whenever the short-term moving average is above the long-term moving average, it is an upward trend. And whenever the long-term moving average is above the short-term moving average, then it is in a downward trend. Now, remember that the blue line is the 50 moving average, while the yellow line is the 100 moving average. So that means that whenever the 50 moving average, which is the blue line, is above the yellow line, which is the 100 moving average, it means that we have an upward trend. While whenever the yellow line, which is the 100 moving average, is above the blue line, which is the 50 moving average, then you have a downward trend. So you can see right here where the yellow line is above the blue line at this point, throughout this area right here. At this point, you can see you have a downward trend. Because remember, the yellow line is the 100 moving average and it is above the 50 moving average line. That means that we have a downward trend, and you can see that the market has been moving down from that point. So if you, let me make it smaller so you can see. So you can see the market has been moving down from this point to the present moment of the market. So you can see from this point, let me draw a line to just show you guys. So you can see like from this point right here to this point, this is a downward trend. So again, whenever the long-term moving average is above the short-term moving average, you have a downward trend. So this is a downward trend right here. Let me show you an example of upward trend. So if we come right here where the blue line moved above the yellow line, so you can see right here, at this point, the blue line moved above the yellow line, which means that from this point, we have an upward trend. Let me make the chart small so you can see what I'm saying. So you can see that from this point right here, so you can see that from this point to this point right here, we have an upward trend. The market was moving up. So that means that wherever you have the blue line above the yellow line, it means that you have an upward trend. Now that you know all that about the moving average or the exponential moving average indicator, now let's go to the MACD indicator. How do you use this MACD indicator? Now let me make this MACD indicator big, so I'll just move it up from this point. I'll still bring it down later. I just want to explain some things right here. Now on the MACD indicator, we have two lines again. You can see you have two lines right here. Now, one line is called the MACD line and the second line is called the signal line. Now which one is the MACD line? Which one is the signal line? So you can see you have a blue line and the second one is, let's call it orange color. So the second one is the orange line. And then where you have these rectangular shapes is where you have your histogram. This is called the histogram. These rectangular shapes in green and red, they are called the histogram. Now one thing you need to take note of here is that whenever you have the histogram in green, the line that is up is called the MACD line. So you can see around this space that the histogram is green, and you can see that the blue line is the one above. That means that the blue line is the MACD line. I'm just explaining this in simpler terms so that it can be very easy for a lot of people to understand. So this is the simplest way you can be able to understand this. Wherever you have the histogram in green, the line above is called the MACD line. So that means that for this MACD, the blue line is the MACD line, and then the orange line is the signal line. I just used that to explain that to you. Now, how do you know when the market is going up or down in a trend? Now, whenever the blue line or the MACD line is above the signal line, which is the orange line, then it means the market is going up. And whenever you have the orange line above the blue line, then it means that the market is going down. So for example, if you look at this MACD indicator right here, you can see that at this point right here, where we have a crossover signal, where the blue line moved above the orange line, it led to an upward movement in the market. So you can see the histogram is green. Whenever the histogram is green, it means that the market is moving up. So you can see that from this point, the market was moving up. It was moving up, moving up. And at this short period of time right here, the orange line moved up above the blue line. That means that there's a downward trend or the market is coming down right here. And then that happened again until this point right here, where the blue line went up again above the orange line, and then the market was moving up. And then at this point again, the blue line came below the orange line and the market was coming down. So this is how you can use the MACD indicator. So whenever you have the blue line above the orange line, it means that the market is going up. Whenever you have the orange line above the blue line, it means that the market is coming down. So that's the short explanation on how to use these two indicators. Now that you know all of this, now how do you now use all this information to know, okay, when do you enter the market, when do you exit the market, when do you take your profit, and all of that. Now when it comes to entering and exiting the trade using this strategy, the first you need to take note of is that always enter the trade immediately after a crossover signal, and that will help you get a very high percentage of winning the trade. Now let me show you what I mean. So for example, if you look at this crossover signal right here, you can see that at this point, the blue line moved below the yellow line. That means that we have a downward trend. Make sure that you remember everything I'm talking about. You can even have a jotter to jot all these things I'm talking about so that you don't forget which line is which line. So right here, the blue line came below the yellow line, which led to a downward trend in the market. So you can see, if I make the chart small, you can see this is a downward trend right here. Now that you see that this crossover signal is showing you that there will be a downward trend, that means that you need to short the market. Now you will now go to your MACD indicator to know the exact time to short the market. So let me put an arrow to indicate this so we can know. So to add an arrow, just come right here to this slant line and prick this arrow right here. So you see arrow, and then you come here to draw your arrow. So this is it right here. Okay, so you can see this arrow right here. So I'm drawing this arrow right here so you can be able to see this line very well. So this at this point is where we have the crossover signal. Let me move it very well so we can see it. All right, so this is where we have the crossover signal. Now you come to that same point on the MACD indicator. Remember I said that whenever the orange line is going above the blue line, it means that the market is going down. So right here under this point where you see this crossover signal, if you are lucky enough to see that the MACD indicator is also showing you that there will be a downward movement in the market, then you need to short immediately. And also don't forget, I said it is always better to enter immediately after the crossover for a very high win rate. So you can see that this is the crossover signal right here, and the MACD indicator right here is showing us that this orange line has crossed over the blue line right here, and then this is leading to a downward movement in the market. So if you short the market at this point, you have like 99% chance of making profit from this trade, because this market is definitely going to go down. And this is because, one, the EMA indicator has shown us that a downward trend is about to start, and right here the MACD indicator has shown us that a downward movement of the market is happening right here. So if you short the market right here, you are making profit immediately. And then you can set your profit to make like maybe 1% profit or maybe 2% profit, or whichever one you are doing. But I always advise that you don't go above 1% profit per trade, because you are using a very short time frame. You're using 5-minute time frame. So you need to be careful. So let's, for example, you enter the trade right here, and then after like, let's say 5 minutes or maximum of 10 minutes, you exit the trade with your profit, and then you are looking for another place to enter the trade immediately. You come again and look for the best place to short the market. Remember that we're in a downward trend. I always advise that if you see that it is in a downward trend like this, don't go for long, always go for short. That's my advice. Always go for short. So you've gone for a short trade right here, and then you've taken your profit, and you're looking for another short trade to take. Then look for another place where the MACD indicator is telling you that the market will go down. And then let's say, for example, you'll be checking and checking and the market is still going, and then it gets to this point right here where the orange line is moving above the blue line again. Then this is another place to enter the trade immediately. Remember, we are still in a downward trend. So this is another place to enter the trade immediately. Once you see that the orange line is moving above the blue line, just come here and enter the trade immediately, and then you exit maybe after like 5 minutes or 10 minutes, maximum of 10 minutes, and then you make your profit again. So you can see that it came down again. The market came down from this point, it came down again. Now let's say, for example, you take your profit after another 5 minutes or 10 minutes, and then you are looking for another place to enter another trade immediately. You can keep on checking the market, and then if you come down here again, you see that this is another opportunity to enter the trade. So at this point, the orange line moved up again. So you can enter the trade at this point and short the market and make your profit after like 5 or 10 minutes again. And you keep on doing that for every opportunity you get. But one thing I will need you to take note of is that don't overdo it. Whenever you see that you've done it like 3 or 5 times in a trend, make sure you stop and wait for another trend to happen or another crossover signal from this EMA indicator. Don't do it for more than, let's say, 5 times from one trend. So what you need to now check out for is to wait for when you have another crossover signal. So whenever you see that another crossover signal is happening, that maybe the blue line is moving up, then you need to now long the market. That is the meaning. So this is what you should be watching out for. Now this is for a downward trend. Now let me show you another example for an upward trend. So let me scroll and look for where we have an upward trend right here. You can see at this point we have an upward trend at this point right here. So let me put another arrow right here to indicate that. So you can see right here where you have this arrow, this is showing you that the blue line is moving up above the yellow line. That means that an upward trend is about to happen. Now whenever you see this kind of thing in the market, again, the next thing is to now go to your MACD indicator and look for where the blue line will be above the orange line. Remember, we are longing now because this is an upward trend. So I advise that you long. So if you're looking for an opportunity to long the market right here, just look for where you have the blue line moving above the orange line in the MACD indicator. So you can see from this point right here, it has already crossed, already above it, I always advise you enter when you see that it is about to cross it. So for example, the best time to enter the trade in this trend is at this point right here. At this point right here, where I have my cursor right here. So you can see that the blue line is moving above the orange line. So you enter immediately, you see this crossover signal, and then you long the market. So if you check the chart, up, you can see that from this point, the market moved up to this point. So let me draw a line to show that. So you can see that it's moved up to this point right here. So you can see it. So let's say, for example, you long the market from this point, you can make your profit within 5 or 10 minutes at this point. You can see at this point, you don't long the market at all, because you can see that the orange line is above the blue line. Don't long the market at all. And then you move to another signal where you see that the blue line is moving above the orange line, and that is at this point right here. So you can see it right here. At this point, the blue line is moving above the orange line. So you can see that if you long at this point, you can make your profit within 5 or 10 minutes. So you can even see on the chart, you can see that the market moved from this point to this point. So these are the things that you really need to watch out for. Now you might be asking me that, but the movement in the market is too small. I might be making like very little amount of profit. Now, no, remember that you are doing futures or derivatives and you'll be using leverage. Now, in case you don't know the meaning of leverage, I already have a video on leverage and how you can use it to make money for yourself. The link to that video will be in the description below. Now, leverage allows you to make more money from futures. So let's say, for example, you are using 10x leverage. That means that you'll be making 10 times more than the movement of the market. If you are using 20x leverage, that means that you'll be making 20 times more than the movement in the market. So because you are using leverage, that is why this is even more interesting and more useful for a lot of beginners, because it will help you to make more profit in a very short period of time. Now, before I go to take an actual trade, let me show you how you can use leverage to make more money from this, like I was explaining. Now, let's say, for example, we enter a trade at this point to long at this point. Now, let's see how much we can make from this. So you come right here to where you have this icon right here, and then you pick it for long position. And then let's say, for example, you enter at this point. So let me pick it from here. So let me increase it to the point where we can make our profit. So let's say we are exiting the trade at this point. Okay, so this is showing us that if you enter at this point, remember we have 3 lines. This is the first line, second line, and the last line. The middle line is showing you the entry point where you can enter the price. The line above is showing you your take profit or your target, while the one at the bottom is showing you your stop loss. So let's, for example, we enter at this point, at this middle line, and then we take our profit at this upper line right here. It's showing us that the market will move by 0.54%. That means the market will move by 0.54%. But that's not the actual profit you are making. Now, let's, for example, you are now using like 10x leverage. Now, your actual profit will be 10 times this percentage that the market has moved up. So that means 0.54 times 10. Now, 0.54 times 10 is 5.4. That means that from this short movement in the market, you are making 5.4% profit. And if you are doing that, let's say 5 times in a day, that's like 25% profit in a day. And that is very huge. So this is a reasonable way you can make money from this strategy. And also you can see that the candlesticks did not even enter the stop position right here. They did not even enter the stop loss area at all right here. So this is like a very sure way, or maybe 99% chance of making profits back to back in the market. Let's go to the Bybit page and take an actual trade. But in case you don't understand any of this, please make sure you watch the video all over again. It is simple to understand. And also, if you have any questions, don't forget to drop them in the description below. And if you've not subscribed to my channel, please subscribe now and don't forget to like this video. Now let's go to the Bybit page. So right now I'm on the Bybit derivatives trading page. So let's say we want to take an actual trade. So the first thing is to do your analysis. So you go to your trading view. So come to trading view right here. Now, if you look at the current state of the market, you can see that the blue line is below the yellow line. That means that this is a downward trend. So that means that what you need to check out for is to look for a very good place to short the market. Now, if you look at the MACD, you can see that the blue line is up right here. That means this is not a perfect time to short the market. What you should be watching out for right now is when the orange line will move above the blue line and then you short the market immediately. But we can't do that now because that's not showing right now. But let's say, for example, you were here at this point, but let's say at this point right here is the current state of the market. So you can see that at this point right here, so let me make it big. So you can see at this point right here, the orange line moved above the blue line. So if you short the market immediately at this point, then you are sure of making your profit within 5 or 10 minutes. Now, the next thing you need to do once you've seen that you have an opportunity to short the market Then you go to your Bybit page, your futures trading page on Bybit, and then you come here and pick your leverage. So you pick cross margin and then you pick your leverage. So I don't advise you use more than 10x leverage for this. That's my advice. So you pick 10x leverage for this and cross margin. And the next thing is to pick market. Remember, you want to enter immediately because you've seen the opportunity instantly. So you want to enter immediately. That's what I advise. So you pick the market order. And in case you don't know, market order allows you to enter the trade instantly or immediately. Now the next thing is to enter the value of USDT you want to use for this trade. Now the value of USDT you're entering for this trade is your margin multiplied by your leverage. Your margin is how much you are dropping from your wallet, and your leverage is 10x. So let's say, for example, we want to drop like $500 from my wallet. I want to use 10x leverage. That's 500 times 10 is equal to 5,000. So I'll be entering 5,000 right here. So you can see that the cost I'm dropping is just 505 USDT. That's approximately $500. So we're using $500 for this trade. Now the next thing is to go to where you have take profit or stop loss. And then you remember you are shorting. So you come to where you have short right here. Remember we are shorting. I said if the market is at this point. So remember we are shorting at this point if you want to short. So the next thing is to click on short right here if you want to short. Now if you come to where you have take profit triggered by ROI and you tap on this drop down arrow. Now you see that you have three options to set your take profit or stop loss. The first one is triggered by ROI. The second one is triggered by change percentage, and the third one is triggered by P and L. I always advise you go for trigger by ROI. So you pick trigger by ROI and confirm, and then you do that for stop loss also. So this is already in trigger by ROI. And then you enter the ROI you want to make, that is the profit you are willing to make. So let's say you are willing to make 5% profit, you put in 5% there, and then you put in your ROI will be, let's say you are willing to risk 3%. Now the meaning of this is that if it gets to 5% profit, you'll be making 25% USDT, and if it gets to 3% loss, you'll be losing 15% USDT. And there is very low chance of you losing with this strategy. There's very low chance of losing and very high chance of winning your trades. And another thing is that this does not mean that the market will move by 5%. No, remember you're using 10x leverage. So you just need the market to just move up by 0.5%. That's the only thing you need. You need the market to move up by 0.5%, and 0.5 times 10 is 5% because you're using 10x leverage. Remember this 10x leverage right here. So I said your actual profit is your leverage multiplied by the percentage the market is moving up. So if the market should move up by just 0.5%, that's multiplied by 10, that's 5% profit for you. So if you put in 5% profit here and then you confirm. So now that you've confirmed all of that, if you come here to where you have trigger price, you see that your take profit is 30,104 USDT, while your stop loss is 30,359 USDT. Once you've done all of that, just come here and tap on sell or short. Now once you tap on sell or short, your order will go through immediately, and then you see your position right here. So that means that once this market goes up by just 0.5%, you're going to be making your money, and if it goes down by 0.3%, you lose your money, and you're only losing 3% of your money. And if it goes up, you make 25% USDT. If it goes down, you lose 15 USDT. Now let's, for example, this market has gone up, that is your take profit, and then the market has closed, you've made your profit. Then the next thing is to go to your trading view and start looking for another opportunity to enter the market. And then you can do this for like 5 times in a day and maybe 100 times in a month. In a month, you can do it 100 times. It's just like 5 minutes or 10 minutes to just take profits for every trade. So depending on how free you are, you can do this multiple times in a day or in a month. Now that you've learned about this strategy and how you can take the actual trade, set your take profit and stop loss and all of that, now I'm going to be showing you a website where you can see how much you can actually make with this strategy if you do it for a particular number of times in a month. And I'll be showing you what you can turn $100 or $1,000 or $3,000 into within 1 month with this strategy. And the website I'm going to be using to show you this is called winrate.io. So you go to your browser and you type in winrate.io. Now this is a website you can use to calculate the profit you can make from your trades if you are trading for like 1 year or 1 month or 10 days or any amount of days. So the first thing you need to do is to put in the starting balance. So let's, for example, you are starting with $1,000. You put in $1,000 right here. Now your win rate, so let's say out of all your trades you are winning 70% of your trades. So if you put this at 70%, let's say you are winning 70% of your trades, and then your take profit. So let's, for example, you just want the market to just move up by just 1%. You want the market to just move up by 1%, And then for your stop loss, let's say 0.6. There's 0.6 right here. For your number of trades, so let's for example in a month, you are taking 100 trades. I'm just going to leave it at 100. So you are taking 100 trades in a month. And then your leverage, so let's say for your leverage you are using 10x leverage. And then let's say you pick the exchange you are using, which is Bybit. Now the reason why I picked Bybit for this video and this strategy is because remember you are going to be paying trading fees for all the trades you are taking. And you don't want to use a platform where the trading fee is too high. And the trading fee you are paying on Bybit is very, very low compared to other crypto trading platforms. It is very, very low. So if you want to use a platform that has low fees, I would advise you use Bybit. And if you don't have a Bybit account, you can use my link in the description below to create an account. And then once you've done that, you click on Run Strategy. So you can see that with this strategy, if you are starting with $1,000 and then you are winning 70% of your trades, and you are using 10x leverage, you can turn $1,000 to $27,000. So you can see this right here. This is the power of this strategy. But let's say for example 70% is too high. Let's say you are not that good, and let's say you want to you are winning, let's say 55% of your trades. So let me even reduce it. You are winning just 55% of your trades, and you are still taking 100 trades in a month. Now if you click on Run Strategy, you see that you can turn that $1,000 to $3,400 as your profit. Let's say for example you don't even have up to $1,000, and then let's say you are starting with, let's say $500, and let's say your win rate is, let me put it at 60%, and then you are using 10x leverage, and let's say you don't have the power to take 100 trades in a month. So let me reduce this 100 to, let's say you are taking 60 trades in a month. That's 2 trades per day. Then you click on Run Strategy and see that you can turn $500 into $1,520. So you can see that this crypto scalping strategy is a very powerful strategy that you can use. You just need to make sure that you watch out for everything that I told you to watch out for on the TradingView chart. Watch out for the crossover signals, watch out for the lines, the EMA lines, the MACD line, the signal line, and everything. So these are the things you need to take note of. Now to end this video, I'll be sharing with you guys some tips that you need to take note of to win more trades with this strategy. Now the first tip I'll be sharing with you is that make sure you practice the use of these indicators before putting any huge capital. So make sure that you practice this EMA and this MACD. Practice the use with maybe a very little amount of money before you start putting like any huge amount of money. That's the first tip. Now the second tip is that always enter the trade immediately after crossover signals. So remember I told you that entering at crossover signals like this point right here will give you high percentage of winning. So you can see that at this point, if you short the trade at this point, you have a very high percentage of winning because it is going down right here on the EMA and is going down right here on the MACD. So entering the trade immediately after a crossover gives you a very high percentage of winning the trade. Number 3 is that always use between 5x to 20x leverage. Number 4 is that use crypto trading apps with low trading fees, and that's why I said I'm using Bybit. Bybit will only charge you a very, very low trading fee compared to other platforms. Tip number 5 is that avoid over trading. Don't trade too much. Don't go and be taking 10, 20 trades in a day. If you want to trade too much, maybe 5 trades is okay. You can see with this win rate, I said if you are taking like 60 trades in a month, which is 2 per day. 2 per day is not bad. 2 per day, you can turn $500 to 1,520 USDT. So you can see that with just 2 trades per day, you can still make profit. So don't go and be taking like 10, 20 trades in a day. Number 6 is always be patient. Now with this strategy, you always need to be patient. Always be patient. Don't be in a hurry to make profits too fast. And the last tip is that always look after your trades. Don't just enter a trade and go and sit down somewhere and be waiting or so for something to happen. Always look after your trades. So this is everything you need to know about the simple 5-minute crypto scalping strategy to make profit. It is simple to do. All you need to do is to make sure you practice this strategy very well before you put in any huge amount of money. And also, if you need a tutorial on how to do futures trading on Bybit, I have a video on that. The link is in the description below. Thank you for watching. I'll see you guys on the next one. Bye.